I'm gonna get started. Hey everyone, happy Thursday. Today we are going to be going through Houston. So if you're new here, you might not know that we actually kicked off our DoorVest operations in Houston. So Houston holds a very special place in our hearts, and I'm excited to walk you through kind of what's happening in Houston, and why we're still so excited about the Houston market. Currently, we are just a little bit of background. We are in 7 markets, starting with Atlanta in Georgia. In Ohio, we're in Columbus and Cincinnati. In Oklahoma, we're in Oklahoma City. And in Texas, we're in Houston, Dallas, and San Antonio. And so when we're looking at markets, we're really looking at areas with strong population and economic growth. And the reason for this is that we're looking for markets with superior appreciation over time. And then lastly, we're also looking at inventory levels. Are they priced attractively and affordable for investors? And so on our platform, our purchase prices are currently anywhere from $240,000 to $360,000, with an average appreciation of 3 to 7%. And then lastly, the return on your investment by year 5 is anywhere from 50 to 65%. And this includes things like your total appreciation, your cash flow, and equity over time. Okay. And so the agenda typically it runs pretty quickly. We'll go through the population growth, what we're seeing, any economic growth that we're seeing as well in terms of businesses and the job market. What's the single family rental market looking like? And then lastly, we're going to go through 2 available Houston properties. Okay, so let's take a look first at the population growth. As I said, it's one of the factors that we look at heavily when we're underwriting homes and also looking at markets to enter. And of course, Houston, again, like I said, was one of the first markets we entered in and has seen a lot of growth as well as stable inventory levels for us. So since 2019, the market has grown 5%, and it remains one of the largest, most populous metro cities. And on top of that, it has recently became the only state with over 30 million residents. And another factor here, when we're looking at population growth, I like to see what are the trends in terms of people moving into the cities. And for Houston, we're seeing a lot of retirees moving there, and they're expected to grow 40% by 2030. And the main reason here is that people are looking for affordability still, and Houston is still an affordable market for retirees to enter. And the second piece is the weather. So a lot of people want that warm climate, and when they're really thinking about where to retire, that is a big component of it. And then lastly, Houston is a large city and it has a lot of access to medical care. So hospitals, one of the largest hospitals are in Houston, et cetera. So retirees are definitely sorting out Houston as one of their top places to move to. And as you can see, in 2020 to 2022, many cities in Texas in general has been booming. So especially in the Dallas, Austin, Houston, and San Antonio markets, which DoorVest is all operating in currently. But it's really interesting to see kind of like the activity right in the suburbs outside of downtowns. So for example, in Dallas, you're seeing the areas around it have increased by 5%. And same with Houston. And these are kind of where our activity is mostly centered around as well. Going into economic growth, it's Texas, so the oil and energy sector is huge out there in Texas, in Houston, and especially with the recent increases in oil prices, it has really helped the city's economy. It's also a hub for the aerospace industry, so especially with the growth in the commercial space, it's been a huge industry for Houston. And they're expected to add 180,000 new jobs in 2023. So definitely a thriving market filled with diversity in terms of employers. As we can see below here, ExxonMobil, Chevron are some of the few um, Fortune 500 companies that are out in Houston. And then we also have tech companies like ServiceNow, and then banking companies like Discover and JP Morgan Chase, who all have either headquarters out there or offices in Houston. Okay, so let's go into the renters market really quickly here. So the US rental vacancy rate is 5.8%. Houston's is 8.7%. And so it's definitely, it might feel alarming to see that, the vacancy rate in Houston is higher than the average. And if you've tuned into, the Cincinnati and the Columbus one, the vacancy rate there was maybe 5%. And so it was beating the US average. But you have to remember that Houston is a really large city. And so it makes sense why we're seeing this like 8.7% vacancy rate compared to markets like Columbus or Cincinnati. And another key factor here on why we're seeing Houston's vacancy rate sitting at kind of a high right now is that though it's still a very affordable market, it has seen so much appreciation over the last few years, and the cost of living there has definitely increased. And so we are seeing affordability, at least for people who have been living there for some time. They're struggling a bit. Overall, Houston's market is still incredibly strong, and we're expecting to see vacancy rate on decline over the next few years. The average rental price is around $1,600, and depending on the area, it can go up to at $2,300, $2,400 in terms of rental prices. And then for home prices, so April 2023, the MLS just released their data, and the general median price was $331,000. And on Doorvest platform, currently, our median price is $297,000. So we definitely stand by like making sure that we bring inventory that is affordable and under the market. So definitely browse around and check out some of the properties that we have listed on our platform. I'm going to go into reviewing 2 available properties on our platform with you all if there are no questions. The first property we're going to go through is 5603 Caraway Lake Drive. And so first we're going to go into the photos. Okay, so this is the post renovation photos already. It looks like the home has a fresh coat of paint, some flooring updates in high traffic areas such as the living room. It looks like we kept some of the original carpet and tiling as well, but updated the kitchen. It has new counters and new appliances. And this is how the front of the property looks like. Okay. And so we'll go back to the home profile. And so this home is a 4-bedroom, 2.5 bath. It's a pretty big home at 3,000 square feet and newly built in 2007. So definitely a unique one. We usually don't have many properties that are built a bit newer in the 2000s. So this is a good home in terms of just the build year. It's expected to rent at $2,315. So since it looks like it's reno complete already, we're probably moving on to the leasing right now. So in terms of investor highlights, a new feature that we added to the home profile as you explore is this S&P line. So here, for a down payment of $80,000, which is 25% of the home purchase price, you can see what your returns would look like. Let's look at year 5. If you invested in this home, for example, what the total returns will look like, including cash flow, appreciation, equity over time. Whereas the same amount invested in the S&P 500 would garner you around $50,000. So I'm very excited to see, this chart shows you the value of investing in real estate without just looking at cash flow, but what your equity buildup will look like and appreciation over time. Okay. And some really amazing things here that you can play around with is looking at, what it might look like if you wanted to sell your home in year 10, and maybe what it might look like if you do a cash out refinance instead. And so a little bit more about this home in general. It's in Houston, but it's in this area called Baytown, which is northwest of Houston. And so this town is a very small community. It's quiet, it's great for families, and it's close to several healthcare facilities. So currently we do have, existing properties in our property management that are in Baytown, and it's a great attractive area for people starting their families and just people looking for some peace and quiet outside of the busy city. And so in terms of financials, we have a few perks here. We do think that this home will have some instant equity after the purchase. We also have a reduced service fee for this home. So I think instead of our usual 10% property management fee, this home is reduced to, let me see. So it's reduced to about 8% for that year one. And then in addition to that, we have a boost for this home. This is a unique Dorvest product in which we'll add 66,000 in cash flow spread out in year 1 through year 3. This is to help with the cash flow on the property every month, or you can choose our points pay down, which means we'll help you with lowering the cost of your interest. And then this one is a better choice if you're looking for, a lower interest rate over the life of your loan. Okay. And then just moving down to the schools, they're all rated highly over the 4, 6, and 7 for the elementary and high school here. And in terms of renovations, we looked at some of the post-reno earlier, but as you can see, foundation is looking really good. We serviced the HVAC, did some stuff to the roofing, and then we installed a new water heater, which we couldn't see in those post-reno photos, and redid the kitchen. All right. And then on to the next home is 5619 Timbers Trail Drive. So this home is a 4-bedroom, 2.5 bath. Again, a really big home as well, 2,600 square feet, built in 1979, a little bit older than the home previously, and it's expected to rent at $2,500. We'll take a look at photos really quickly, but this home is not completed in terms of renovation yet, but you can see that it looks pretty good generally, good bones, and looks well taken care of. And so I don't expect that the post renovation is going to be a very heavy lift here, but we'll see when we go into the renovations section. Okay, this home again, so Houston, like I said earlier, is a really big city. It has tons of suburbs and counties. I think it has like 6 counties here. And for this home, it's in Humble, Texas, which is north of Houston. And we really, really like Humble. Our CEO has a few properties here alone. And so we can go into the highlights of Humble in a little bit, but first we're going to go into some of the highlights. And similarly here, we expect a 7% year-over-year appreciation here. It doesn't mean every year we're going to see 7%, but this has been the average in the last 10 years or so. And again, you can see here what that $80,000 down payment would look like if you invested in this property compared to what the S&P 500. So Again, the total returns here by year 5, $144,000, which represents about 55-60% growth. Whereas the S&P 500, you'll garner anywhere from $52,000 in total returns. Okay, and then again, you can see some of the strategies in terms of exit strategies that you can deploy. So whether it's selling your home in year 10, what that might look like, or doing a cash out refinance. So yeah, a little bit more about just the Humble area. It is very close to malls and arenas as well. And so, like I said, it's a very quiet town as well, great for families. And it's north of Houston, so only about 20 to 30-minute drive if you need to go into the downtown city. For the financials here, we also have a reduced service fee for year 1. And on top of that, you do have the option to either choose between our DV boost and points pay down. I won't spend time on it here because I just talked about it earlier, but if you want, you can also go down to see what the benefits and perks look like. And then lastly, the schools section and the renovation. So schools ratings are all over 4. And for renovations, doesn't look like we're expecting too much in terms of big ticket items. There will be some general maintenance on the structural items such as the HVAC, roofing. The kitchen will be updated a bit, and the counters will have new granite counters, and then some flooring updates onto the home. Well, that concludes our section of going through some properties and the Houston market generally. If you guys do have any questions about the properties I shared, about DoorVest in general or the Houston market, definitely reach out to us at clientpartners@doorvest.com or marketing@doorvest.com. And all right, thank you all for taking the time today. I hope you enjoy your long weekend this week, and have a good one. Bye.